Hi everyone, welcome to Wealthy Mindset. My name is Oliver. Thank you so much for watching. I really appreciate it. I hope you guys are having a great day like always. In today's video, I'm going to be talking about BlackBerry stock for March 9th to March 12th trading week, giving you guys the lows and the highs by analyzing the graph. Now this week is going to be a little bit different because I am extremely busy this week. So unfortunately, I won't be able to give you guys the day-to-day or every other day video updates. What I'm going to do is I'm going to comment down below, pin that message so that way I can keep you guys still updated if anything drastic happens outside of my price target predictions. Now, a quick disclaimer like always, I'm not a financial advisor, I'm not a professional, and everything I do share with you guys is just my opinion. It is not advice, so please do your own due diligence and research before buying and selling. Do not buy and sell based off what I show you or the opinions I do form. I do own shares in BlackBerry, been holding for 6 years. Also, if you do like videos like these or stocks, passive income, mortgages, credit scores, financial freedom, consider subscribing. It does help with the channel a lot. Thank you so much. Really appreciate it. And if you do like the video, consider dropping a like. Sorry about asking, but thank you so much for awesome support. I really appreciate it. Thank you so much. Now, if we look at the graph, it looks like we're doing pretty good because March 8th trading day, we went back up to the support line that I've talked about in the past. And just in case if you're new, there's an upward trend support line dating back since October 2020, back tested in November, back tested in December, January 2020 as well, back tested. The only problem is, and by the way, this is an algorithmic view. Logarithmic view, we broke the support line. Now we're relying on the algorithmic one, which is fine because technically the algorithmic one is like the true form one. And what happened was we did break through it. The only thing is though, the plus side is it was a false breakout, bounced back up to the upside, bounced off as support, broke through it again, false breakout, but then bounced off it again as support, and then bounced as the, almost somewhat bounced off the short moving average as support as well. And you would say there's only 2 touch points with this upward trend support line right here as well in the red line, right? The thing is though, this is the month moving chart. If I move to the 5-day moving chart, you can see a bunch of touch points. So it's actually an upward trend support line nonetheless, so that's pretty good. So I believe the market tomorrow could be down, not specifically just BlackBerry, but I believe the market will be down for the early parts of the day. Midday could start going up for the overall market. But either way, I think what might happen is for BlackBerry early in the day, it might come back down and bounce off to the upside. So if that's the case, we have support with the moving average, plus we have support on the upward trend support line. So if you see a dip lower than 975 tomorrow, I would not be too worried, would not lose hope. And I'm gonna go through the downside first, just in case. That way you guys are covered for the rest of the week if we do go down in terms of what levels will act as support. And then I'm going to go to the upside. So if we were to go lower hypothetically, the first level that we have that we could rely on is the 963 that we've seen multiple times that I've shown on this channel. 963 hopefully will hold us. If not, we'll be dropping down to 955, 950. Hypothetically, we would start trickling down to these levels again. 940, 930 is quite a bit of good support as well. We did see it stagnate here and there when we were dropping down pretty quickly. But the problem is it didn't hold enough because we were dropping relatively quick to $9 next, $8.99, and then the $8.85, $8.82. Hopefully we don't go lower than this level again. If we do, I personally don't think we're going to go lower than $8.35. Between $8.56 and $8.59 is extremely strong support where it's not going to happen. I'm going to mention these. I was going to show it here. So right here, these levels are these 3 levels that we've had back in December, which is 835, 805 is extremely strong support, and 797. But I personally don't even think these 3 are even in play at all. If anything, it's the 853 worst case scenario. And personally, I think we're heading straight up because we're above the short moving average, upward trend support line formed. We're above back up to the upward trend support line dating back since October 2020. MACD lines in the positive. The only problem is we're below, we have resistance levels to tackle, and we're below the long moving average, which is technically fine because I think we have enough momentum to go up to the upside. Because what's going to happen is we have earnings coming out at the last week of March or first week of April, not announced yet. But if you look at past years, the times that the earnings report would be coming out would be the last week of March, first week of April. So building up momentum towards that with the earnings, I think we'll be able to break these resistance levels and just continue on the upside. It's going to be slow. It's going to be a bumpy road, but nonetheless, it'll be successful in my opinion. Again, take everything with a grain of salt though. Nobody knows for sure. Definitely do not buy and sell based off like my opinion that I'm just like, don't take it as gospel basically. So if we do come back down to 963 like I stated and bounce back up to the upside, or not even just do that, let's just say we continue to the upside without even coming down and bouncing back up, we would have issues at the 988, 983. Now if you think it's going to continue on the upward trend support line and just like hug it for the rest of the week, then what you're thinking is, if I could just draw here, you're thinking that it's going to, yes, come down, bounce back up, come down, and then finish the week at pretty much right here where I stated 975, 978, and 980. Maybe even 983 because we have resistance there, but about around that ballpark, plus or minus 10 cents, let's just say. So if you think it's just basically going to end up hugging the upward trend support line, then that's what it could do. But if you think it's going to continue to the upside like I think it will, you're looking at 988, 983 between this level, then 990, 995. We saw resistance at 997, naturally 999 as well. Can't talk, sorry about that. Then $10, then $10.02 like we saw today, 10.05, 10.11 to 10.15. Now 10.15 is significant because we have this downward trend resistance line dating back since February. You can see multiple touch points right here. If I zoomed in, they look a lot cleaner, trust me. So passing that would be right about here, 10.15. And then after that, we're looking at passing this downward trend resistance line dating back since January 2020. And to pass it, we need to pass 10.27, 10.37, somewhere around that range, depending on like how we pass it, or when we pass it, sorry about that, later on. And then we have resistance at 10.44, 10.54, which before I get to 10.44, 10.54, to pass this long moving average, what's going to happen is if we keep rising, this long moving average is technically going to like curve up a little bit. So by the time we meet it, it's technically at 1039, 1038 when I measured it at 1039, but by the time we meet it, it's probably going to be on the range of 1044, 1054. And even though we have resistance at 1044, 1054, because of the moving average, the long one, we also have horizontal resistance at that level as well. So it's quite a bit of resistance where we might have difficulty passing that range. Maybe even the 1059, 1060 is going to be extremely difficult. I noticed that usually it has been difficult as well, but essentially once we pass that, we might be stuck at the 1060 to 1061, 1069 for a while. There is resistance at 1072 to 1074, 1078. The only thing is that I wouldn't be concerned about this too much. 1088 is stronger than this one in my opinion, but I wouldn't be too concerned about this as well. We might be stuck at 1088 for a little bit, but not much. The 1092 is the extreme one. Unfortunately, 1092 will cause issues. I've seen it multiple times where we just get stuck on it, but usually by the end of the day, if you do get stuck on it or the next day, you could hit 11.04. But if you've been a viewer on the channel, you've noticed that the 11.04, we've had, like I've showed, 2014, 2015, 2016, I believe those are the years. There's multiple false breakouts to the upside. The unfortunate part, if you look at the graphs for during that time, there's like a horizontal resistance level that you could see multiple times. We're just trapped underneath it and just have spikes up as false breakouts to the upside and come back down. So that's what I'm worried about. But because of earnings, I'm going to be releasing videos. And by the way, I know I say this all the time, but I'm going to be releasing all the videos in terms of BlackBerry, not all of them, but most of them, hopefully this week. And one of them is going to be explaining why I believe that this earnings is going to be a surprise earnings. Worst case scenario, at least meet street estimates. And because of that, and because of earnings growth that I'm expecting in terms of the cybersecurity side, I think we'll be fine with earnings moving forward, right? So given that, I think over time, this won't cause us an issue. Like I stated in the past videos, once we get underneath it, we might get trapped underneath it. So be careful of that. Again, nobody knows for sure, and we could break up to the upside as well. So once we break up above the $11.04, yes, by the way, but there is a lot of more resistance levels between these resistance levels, but I'm trying to like mention only the major ones. So like you might notice sometimes, like for example right here, 995, we were stuck at 997 quite a bit, right? So sometimes they're more stronger than they're supposed to be, but just keep in mind there is more resistance levels here and there, but these are hypothetically the most strongest ones I could find. Next, after these three levels is pretty significant because this is right now in the algorithmic view. In the logarithmic view, just because I didn't want to include so many lines showing and everything and switching back and forth from logarithmic to algorithmic, these levels, 1115, once we pass this, we're going to have issues with 1115, 1127, 1129, between 1127 to 1129, and then between 1138 to 1148, ultimately 1150, right? These are all horizontal resistance levels, but this downward trend resistance line in the logarithmic view, it depends. If we spike up quick enough, we'll meet the downward trend resistance line from the logarithmic view plus the horizontal level resistance levels at the same time. So we'll get knocked down early in, like pretty much early in the day or early in the week, trading week. And then if we prolong it, getting up to that level, then it would be the downward trend resistance line would meet with the horizontal lines at this level at 1127, 1129. So once we pass this, we could technically get to these levels easier at the upper levels. The only thing is the 1150 is really, really strong horizontal level resistance. So this one's going to be difficult because even if we pass it, it'd be like 1151, 1154, stuff like that. It's quite a bit. It's going to take a lot to pass 1150. Then if we finish off by the end of the week and not passing it still, it'd be like 1115 by the time the downward trend resistance line gets to it. So just keep that in mind. It's going to be like a moving. Most of these averages do kind of move, just like I stated with the long moving average right here. By the time we get to it, it's probably going to be 1044, 1054, 1044, 1054. But all these levels that I mentioned right here, most of them, almost all of them, like 95% of them, or 90% of them are horizontal resistance lines. Not all of them, but most of them are. So regardless, even by the time we meet them, it doesn't matter. These lines or resistance points will be resistance regardless because of horizontal resistance lines. And that's pretty much it for the video. Thank you so much for watching. I really appreciate it. If you guys did like the video, consider dropping a like. It does help out the channel a lot. And if you do have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And if you do like videos like these, or stocks, or passive income, mortgages, credit scores, financial freedom, consider subscribing. It does help out the channel a lot. Thank you so much for that. And I'll see you guys in the next video. Peace.